Welcome, welcome. Um, Welcome to the fib retracement video. Um, and in this video, this should be very short and quick, but in this video, I am going to show you how to access your fib retracement, um, and set your settings and how to use your fib retracement tool. So, um, the fib is just a tool. It is not an indicator. It is not it's just a tool that helps to provide confluence when you're trading. Okay. So first things first, I want you to go to your trading view, open trading view, and I want you to come over here and let me use this. I would want you to come over here to um, right here where it's the fib retracement tools. I want you to click on um, the arrow here, and I want you to select fib retracement. And if you're going to start using the fib, add it to your favorites so you don't have to keep going back and forth. Okay, so now that we have the fib retracement, and hold on, I want to do this before. Um, okay, so then and let me start over. Once you grab the fib retracement, click on your chart, hold it, and then click it so that it's on your chart. Okay. Um, Now I have quite a few settings on mine. I like to know if it's just going to come to the 23.6 or the 38.2. Generally, because if that is the case, 9 times out of 10, okay, I'm going to say 8 times out of 10, price is going to go to the negative 618, the negative 618. Okay. But we're only going to talk about the negative 27.86%. Um, and then also the 50%, 618, 78, and 88. Okay. So first thing you want to do is double click on your fib. Okay. Because you want to adjust your settings. My recommendation is to unclick everything in your settings. And then I want you to take a screenshot of these particular settings and um, let's see. Okay. So I have um I I think I saved it. I hope I saved it. Um I have two. I did not save it. Okay. I have two retracement settings, and it's okay that I didn't save it. Um but this is still the same. So I want you to click on the settings and save these settings. And I'm going to add in here the 50% and the 618. So I want you to unclick all of your settings, and then check the 0, check the 0.05, check the 0.618, 0.618, check the 1, check the 886, check the 0.786, check the negative 0.618, check the negative 0.2786, check the 1.1, and check the 1.2. If you do not have these particular settings on in your settings here, just create one. Create one. You can take out any of these that aren't checked and put the number that I recommended to check. Okay. All right. So I'm going to pause for a picture. Now, also, I make all of my lines one color. Before I just changed this, they were all pink. Okay. Now, as you can see, they're all black. I'm not interested in putting the golden zone. Like I know what it is. If you're going to mark up the golden zone, you're already going to mark it up with the yellow zone. So I don't need my fib to be a bunch of different colors. Okay. Um, that I can barely read anyway. So once you have your settings, as far as background, I don't use background. Okay. I use prices, meaning this is telling you what the price is over here for the fib. Okay. Um, I use levels and I used them in percents. So the 78%, 786%, 88%, 618%. So I use the percents. Okay. And my text, I center it in the middle. When you do the top, um, oh, wait a minute, hold on. In the middle. When you do the labels, which are these here, which are these texts here. If you do the top, it's a little off from the line. So I just make mine sit in the middle. So the line, so when I go and I know which one is exactly the 78. I know which one is exactly the 88. I know which one exactly the 618. Um, the 50% 618. You can draw that zone. I even have a template for the 50% 618, makes it golden zone, which most people call that the golden zone. Okay. All right. So once you've gotten all of that, let me just hold on. I want to put this over here. So once you've gotten all of this, all right, I'm going to set that there. Um, how we're going to use this. Basically, and this is why I have been driving market structure. Market structure is the catalyst of all things trading. Market structure is the most important thing next to risk management when trading. Okay. So I've been drilling swing highs and swing lows, and I want to make this very clear. I won't even say that in here. I've been drilling swing highs and swing lows and basing it based on market structure, right? So whether it's higher time frame swing high, swing low, or the internal swing highs, swing lows, swing high, swing low is all the same to me. Okay. So with that being said, if you're looking at a daily, you understand that this is the break of structure. This is your swing. This is your swing low, and this is currently your swing high, right? Now, currently price is when you're fibbing and you're fibbing a bullish swing, you want to fib from the swing low, wick to wick, to the swing high. So you are fib from the wick of this low to the wick of your swing high. Okay, that is a daily move. Now, we also have these internal swings, right? So, and I'm just going to start from here. You have this swing, this swing, this swing, and this swing. All right. So you can fib the last swing. And let me go here. You can fib the last swing from wick to wick. And currently you see that price is at your 78, almost at your 88. And I have an alert set there. But if you just mark up your 88, price is already tapped to 78. As you can see, it hasn't pulled back from the 78. So you'll have to see what it does at the 88. So if you now go down in time frame to the 1 hour and you look for your demand zone, this is my demand zone. Okay. So I really want price to pull back to this zone. Okay. Now, if price gets to the 88, if price gets to this 88, you can clearly see that the current structure, internal 1 hour structure, is this right here. So if it got to the 88, that's my swing high. This is my swing low. This is my break of structure. So price would have to break there. So what I would like to see is a pullback. I would like to see price tap in, then pull back to then keep buying, right? And where can you, when and or if that happens, you're able to take your, and I'm going to delete this. Was it this fib? No, not that one. I'm going to delete this fib. Um, you want to take your, you want to take your TP. The first TP can be 0 of the fib at the top of the fib, which is this high, which is where I always pretty much take my TPs. Your second TP would be the negative 27. So this would be TP2. Okay. This would be TP1. I am not a person who takes partials. So usually at TP1 is when I take um, all of my profits. Okay. Now, if price, because remember, this is your swing low, right? This is your swing low. Oops. All right. So if price closes below this zone, we know that we have a shift in structure. Okay. We have officially gone bearish, starting to go bearish. Okay. So you may get a pullback. So with that being said, now instead of fibbing from the swing low to the swing high, you want to fib from the swing high to the swing low. So if price came down to here, broke structure or gave you a market structure shift, okay, you want to now fib from the swing high to the swing low that broke, that shifted structure. Okay. And then once you start seeing the retracement, you want the retracement to come back to whether you're trading 50% 618, which is the golden zone. Whether you are waiting for price to pull back to the 78 or whether you're waiting for price to pull back to the 88. And I have a whole 88, 78. Okay. And then once price got there to these zones, you would look for a shift in structure to then start selling back down to these lows. Same way you did if you're looking for a shift in structure here to start buying back to these highs. Okay, so I'm going to delete all this and I want to even go down to like a 4-hour time frame just to identify um, just to identify some other structure. So for instance, you have, let's just use this 4-hour structure right here. You have this here, here, and then price came up here, right? Actually, it came a little further up right here. Okay. So we're going to fib from this move to this move. As you can see, price came back to, that came back to 100%, but guess what? It did not break the swing low market structure. It did not break the swing low. And this is why we put our stop loss with the little wiggle room below our swing lows and above our swing highs. Okay. And as you can see, price pulled back, shifted structure, and bought up to the negative 27, bought up to the negative 618. So from where price pulled back to, even if you did it from the 88, that's 149 pips, to the 618 is 190 pips. Price has continued to keep buying, but that could easily have been a trade for the week. Okay. So if you have any questions, please feel free to drop them in the chat. I do have some homework for you. And what I want you to do is on 3 different charts. Okay. I want you to show, or you can just choose one pair, but mark it up. I don't want to see your daily, your 4-hour. I don't want to see all of your fibs on one chart, or just find another section to mark up. Identify the structure. So mark up your swing high, your swing low, your breaker structure on the daily. I want you to mark it up on the 4-hour, and I also want you to mark it up on the 15-minute. Okay. Mark up the mark up structure, and it doesn't have to be 1,000 swing high, swing lows. You just need one swing high, swing low on each time frame. Mark it up as a swing high, swing low, break of structure. whether it's bullish or bearish. And then I want you to fib the move. I want you to fib the move. I want you to show where price pull retraced back to, and then I want you to show the negative 27 and or the negative 618 where price um, continued to trade to, whether it's bearish or bullish. All right, that is your homework assignment. Um, I'm looking forward to seeing your charts. See you.